Hi, today we are going to talk about loss aversion. Intuitively, human beings are averse to losses. They do not like their portfolios or their investments going into the red. We are okay as human beings getting a lower return, maybe not getting returns to our expectations, but we hate losing our capital, hate losing money. And this notion has psychological and research-based foundations as well. There have been surveys where people have been asked if they would accept $1,000 in a coin toss or were they willing to lose $500. The average human being would not take that bet, although it does make sense to do it mathematically. Similarly, if we were to extrapolate this logic to equity markets, a lot of times we've made very sound investments. We bought stocks with great research. However, when the market falls and things start going down, as it happened in the COVID period, perhaps, a lot of our inherent logic and foundations start being questioned by ourselves. We start thinking of other default settings that probably I should have kept my money in FD, in fixed income securities. At least that gives me peace of mind. Maybe I would have saved for a deposit for a house, or maybe like even bought gold. Perhaps it doesn't lose its value over time. So we start thinking of these maybe little slightly negative or defensive sort of things. And when the market goes up and everything is hunky dory, we start getting into a more risk on mood because we don't have a recent memory of loss, right? So I think markets periodically feed on our loss aversion. They feed on the fact that when we panic, we sell. And that is something to remember. Next time we make an investment, we buy a stock, we should write down the reasons why we bought it. And when the price goes down, instead of panicking or instead of really like pressing the sell button, we should question that the assumptions we made when we bought it, have they changed? Has anything changed materially? And that logical structure or database thinking should be the reason to buy or sell. Maybe that will help, instead of selling, to buy more at a lower price even. So this is worth remembering, that human beings have this loss aversion bias, and if we could avoid it, if we could trade ourselves, then we do really much better in the stock markets. Thank you.